Markets are in buoyant mood ahead of today's highly anticipated non-farm payrolls reports. Risk assets are trading near their weekly highs. Um, Equity futures are also firm, and bond yields are kind of weakening slightly currently, early Friday. The consensus is that a Goldilocks NFP, neither too hot or too cold, will keep the Federal Reserve on course to cut rates this month by 25 basis points, which is fully priced in, and possibly again by year end one more time, which currently is at around the 50-50%, to be fair. This optimism, of course, follows a string of softer US labor data and dovish leaning Fed commentary, which has prompted traders to bet on a more accommodative policy stance than before. The JOLTS report was the one that actually um, took the odds of a rate cut from around 90% to about 100% uh, this week. So we're going to focus on Euro USD, but while we are here, just some insights on gold, pound, and dollar yen ahead of the NFP report. Of course, all of them are consolidating. Gold has a record high at 3,578 and a low at the 305, $3,511. These two levels are very important. A break of 3511 could take us down to the previous swing low at 3438, and a break of the top could actually move past the 3600 and towards the 3650, because we're going to be in discovery territory, so it's going to be more important. These psychological levels are going to become more important. On the British pound, it's actually like right in the middle of the range. A double bottom at 131.40 also, and a top at 137.80. So a continuation to the upside for the pound would open the door to that um, upper territory. And then, of course, we will see whether this is going to be holding or not. But it seems like it's right in the middle for NFP to either pushing it to the one side or to the other. Okay, so these two levels are highly likely that are going to be reached. At least one of these um, levels is going to be reached following the NFP. Of course, if the NFP is really not really moving the needle, i.e., there is no surprise or the divergence between actual and expectations is not large and it comes as expected, then it might take a little bit longer to accelerate or to decelerate, if that makes sense. When it comes to dollar yen also has the top of this channel, which to me still appears more as a correction, um, like a brother from the initial leg to the downside. But either way, we do have the 149 handle to take into account to the top, and the previous swing high at 149.20 and the top of that trend line. On the downside, a break of the 147.80 will get us down to the 147, which coincides with the bottom trend line of this channel. And now a little bit more in depth analysis just on the euro dollar. The euro dollar, it's trading similar to GBPUSD in the short term, but it's a little bit more biased to the upside if we consider these as the mean, if you know what I mean. A move to the upside, of course, will get us to the previous stop, 117.35.40. To the downside, we're probably gonna um, retest the 11600, the 11600, if not break it initially, and then either 115.80, which is the previous swing low we reached back at the end of August. A move below this level would open the door to the 61.8 Fibonacci retracement at 115.24. To the upside, of course, the next level to take into account will be the previous high here, around 117.60 or 70, and then the previous high. The thing with the euro dollar is that in case the NFP is actually disappointing, we could eventually, over the course of next week, there is also the ECB, of course, coming up. We could head towards a 118.30, perhaps even break to new 2025 highs if the NFP is disappointing. But it will be more likely a case of false break if we do see a break, if it happens ahead of the ECB, which is next Thursday. Now, looking at this particular structure, we are consolidating, and we are consolidating in a manner where the other day we thought there could be a potential pennant here playing out, right? So this pennant, though, however, now has failed to cross above the previous high and to break outside the downside trend line, and has come down lower, right, to this lower trend line. Now, this could be assumed a triangle by some. However, uh, having some experience with Elliott waves myself, this is indeed resembling a triangle. But if you compare this wave and this wave, they are very large and very wide in comparison with these three final waves of the triangle. So if this is going to be a triangle, we're probably going to have a case of an extended variation from current price perspectives. So we would probably see something like this. Okay, and that would actually signal a more structured approach, if that makes sense. Either way, we don't really need to have a triangle or an actual pattern all the time, right? So how I'm seeing this also is potentially that the bottom was at 113.91. This is, or was, a wave one. This might be a wave two. We could get another leg down or not, or it might just be like the beginning of a new trend here. Okay, so I'm looking at this in different dimensions. What I am focusing on, however, is whether we do manage to break above that resistance, or are we going to start seeing prices falling below the 115.80. Either could happen, and it will really depend on the NFP and ECB next week. But for now, I want to just like put the focus on the 117 to the upside and on the 116, probably 1630, 1625 to the downside ahead of the NFP.